Yo, yo.
Yo, yo.
Yeah, yeah. Get right here. Get right.
Yep. Don't forget to send them out.
Yep.
Damn.
All right, send them out. Send them out. Send them out.
DB. Early Bird, what up, bruh? Paul, what up, P? PB. Shout out to my guys, man. I love y'all. Got another good one for you guys this evening. What is it? April 5th, 2022. What up, Sherry? Thanks for tapping in again. We're going to try and get to it ASAP, so we ain't stringing y'all on again for another hour.
We good for that.
I don't think they mind, though, when there's money involved, when they getting paid.
What up, everybody? What up? What up? Thank you for tapping in. Thank you for tapping in.
Yes, sir. Yep, we got a few good segments for you guys.
Whose bracket got killed? Who won it all? Who picked Kansas?
Oh.
Bloopers. Who put Kansas?
Yeah, man. That was a good ass game, though. But yeah, man. What we got? 1, 2, 3, 4, 5, 6, 7. About seven solid segments for y'all.
Yep.
The 7 solids. Man, Tesla's doing this thing. I guess Ian went on that what's DC Young Fly's podcast? His show?
85 South.
Yeah, I guess he went on there. It was a month or so ago, or maybe a couple months ago. He just had a recent one, but he went on a couple months ago and told people to get Tesla at around like $840, I think. And it's at $1090 right now. Yeah. So if they listen to Ian, they up. I'm definitely about to cop some Tesla. I might do it before the split.
For real. I might need to too.
I definitely gotta wait for a pullback though, because it's on the uppity for sure.
Mm-hmm. Damn,
but yeah, man, come on, let's get into it. Let's hit them with the welcomes.
Let's do it.
Yeah. So welcome back, you guys, to another Market Monday review. Episode number 15. This is the Realest Review Show. If you didn't know, now you know.
The Realest.
So yeah, man. We like I said, we got 7 solid segments. I am Trey Tyler, aka Gucci 3 times, aka the Black Leprechaun. That's my crypto name for if you guys didn't know.
Ooh, come on. Yeah, man. Welcome. As y'all know, my name is Darius D. Coleman, aka D Time Coleman. You already know it's my time to shine, and it's about that time. So y'all
Yes, sir.
welcome. We appreciate it to Squared Knowledge, episode 15, the Realest Review Show. So y'all
Come on.
welcome, and let's get started, man. So we're gonna start it off, man. Just be ready, man. All I can say is be ready. We got some more stuff coming for you guys down the pipeline. We're just trying to put it together now.
Yeah.
Shout out to everyone that does tap in consistently. We appreciate you. But yeah, man, go ahead and let's rock out the disclaimer and let's get it popping, man. Let's go.
Okay, yep. Before the disclaimer, I just want to give a quick thank you to EYL Red Panda Fellas, Troy, Ian, and Rashad. Thank you for giving us this great material to review, and we're gonna do what we do, man. So, quick disclaimer: we are not financial advisors or CPAs. Our content is for entertainment purposes only. Entertainment and educational purposes. Excuse me. Trading and investing has considerable risk. Please do your own research and please do your own analysis for your own circumstances. And please consult with a financial advisor.
Mm.
And with that being said,
Please. But with that being said, please make sure you tap in and jump into this investment game, man, because it's definitely a gem to be a part of. Definitely something to make money, make general wealth for you and your family. So definitely do your research and get into it, man, because the world is changing as we know it, and it ain't gonna stop for none of us. So. But yeah, so man, let's jump right into it.
Hold on, real quick too. Hold on,
ahead.
my bad. Real quick, please like and share for you guys that are in the live. If you click on that little paper airplane, send them out to everyone in your friends list. We greatly appreciate it. We're trying to spread the word.
We greatly appreciate it. The knowledge is for everybody, man. We call it Square Knowledge for a reason. We want to, spread the knowledge to everyone to tap in and learn from everybody else as well. So definitely bring them in and let's talk shop. But anyway, so the first segment we're about to go into is the yield curve. What is the yield curve? Do you know what the yield curve is, and what does it do for you?
Yep. Thank you, Jessica. So yeah, the inverted yield curve, right? It's an indicator that investors and business people alike use to help predict when a future recession is coming, right? So the inverted yield curve, there's 2-year that has 2-year bonds and 10-year bonds, right? So
Which are paired together.
Which are paired together, exactly. So when these two indicators reach zero, when they get to zero or below, that's an indicator of a coming recession. And so the 2-year and the 10-year, basically, when those get low, right? The 2-year, when it hits that low part, it'll investors will move from that 10-year bond to the 2-year bond. So when that 2-year bond starts to pay more than the 10-year bond, that is a signal for a coming recession, right? And it is a lagging indicator. So when these points hit the zeros or below, it's not something that's saying a recession is going to start tomorrow or even next month. Usually it's between 12 and 18 months. I've heard some people say 12 to 16, 8 to 16 months, but it's usually within that range. Yeah, it's around that area when the recession is supposed to come. And it's not 100% either. But most of the time when this inverted yield curve happens, and it's on a chart, it's on a graph, so if you Google it, pull it up, you can see it. When it happens, usually within the coming year, give or take a few months, a recession usually comes.
Perfect. And explain that one more time. Explain that one more time. You said it's on the chart. Where's the end?
Yeah. So what was that?
I was you go ahead. I was just saying, just explain it one more time where you can find the inverted yield curve. How do you see it, and all that stuff. And you said I just wanted you to repeat it.
Yeah, no. So if you type it in, I'm trying to see where I could find the graph, right? Because they're treasury bonds. Where can you find this graph? Yield curve. Treasury yield curve valuation model. Why is my computer tripping?
What up, AB? Appreciate you tapping in. Ant, Tone, appreciate you.
What up, Tone? What up? So yeah, if you type in U.S. Treasury, here's one right here. If you just type in invented yield curve graph, it'll pull up like past and present models. But I don't know if I do this, can you guys see?
Yeah, I can see it kind of. Yeah.
Is that kind of hard to see there? Let me see. So this line here, it's hella hard for me to do it. We need somebody to be able to pull up shit on our screens for us.
Like I said, we about to
So,
elevate this show. Right, we can see it.
So look, it's a graph. It's a graph that basically just it looks like this. And if you look on the graph, you can see when the lines come down and hit the zero or go below zero.
Mm-hmm.
And the 2-year and 10-year, they're treasury bonds. So when that happens, those are signals of a recession soon to come. You feel me?
Perfect.
It means the 2-year bonds are now paying more than the 10-year bonds. And same thing with the 5 and 30, right? The 5-year is now paying more than the 30-year bond. So yeah, it's a lagging indicator, like I said though, so it's nothing immediate. But check it out. It's a graph. You can look it up. There's plenty of videos and stuff on it. So yeah. So what some of the guys were talking about is it's like you said, it's a lagging indicator. So they think it's a signal for a bad coming next year, but this year they expect things to end on an upside. So that they think we're going to have a dead cat bounce, which is basically like we saw the last couple months when everything was trending downwards. Things were dropping off a lot. Now they're expecting it to come back up and finish up positive for the year. But coming in next year, they expect these indicators to come true, and that a recession will be coming. So
be on the lookout for that.
Yeah. For the first quarter, the NASDAQ was down 9%, the S&P was down 5%, and the Dow Jones was down 4.6%. Which leads us into April, right? The beginning of the second.
Yep.
You want to talk about that?
Yeah. So what Troy was basically saying that in April, it's historically the best month of stocks throughout the years, throughout the history of stocks and just how it grows. Because like for some reason in the second quarter, which is the start of April, is the start of the second quarter, which historically that's when everything starts to go. It looks like it's the up and up. But again, that as we all know, stocks go up and down. Some stocks like Tesla, for example, is volatile. So you just never know.
Yeah. And yeah, like you said, April is usually the best month for stocks, but also when there's midterms in April, which there is this month, it causes a negative month, like 60% of the time. So 70% of the time, April is a positive month, but 60% of the time when there is midterms, it causes a negative. So that right there are conflicting. I think that was Troy's words. Are conflicting indicators. So you just got to be on your toes about it.
Yep. So so anything else you want to wrap up that segment? Anything else? That was obviously that's definitely crucial. It's definitely something you guys want to tap into, do research on, because that can kind of tell you how to play your game, how to play your strategy, because it'll show you guys everything that's going on. The treasury bonds, so they're true. You know what I'm saying? They're not too volatile in that sense, and they'll kind of let you know their indicators, like we said. So definitely a good segment that we wanted to lead off with. But moving on, unless you got something else.
Well, just I felt like I explained that kind of not that great. So if anyone has any questions about it, please ask a question and I can touch back over that. But we can move on.
Yeah. All right. So moving on, kind of piggybacking off our last segment. signs of recession. Just a little bit more to continue. What are some signs? You know, they went
Yeah.
over this in the Monday Market Update or show with the brothers. So we're going to kind of continue that. And there's, you know, obviously more indicators that tell us what you know, when a recession is going to happen, and we're about to break that down for you.
Yep. So yeah, besides the inverted yield curve, another thing is valuations of startups being cut, and a Fed probability recession model, which you can find on the Federal Reserve website. So yeah, the Fed probability recession model, valuations of startups being cut, and the inverted yield curve. Those are three things you can check out that are signals of a recession, right? That can help you predict if a recession is coming.
Not always true, but definitely big indicators that help.
Yeah.
And then or obviously what they you know, they kind of joked about, but they are serious about was you can always tap into Monday Market Updates with the EYL. They will definitely keep you on point with what's going on with the stock market.
Yeah, for sure. Oh yeah, they were definitely serious about that. So that adds a fourth. That adds a fourth thing.
Yeah.
to staying on point about when a recession is coming.
Yes, sir. Yes, sir.
Yeah.
All right. So yeah. So moving on. So we're about to head back. So that was kind of just obviously those 4 points. You know, 4 points of what signs you can get into to see what's going on with the stock market, good or bad. The next one we're gonna go into is Tesla. Man, Tesla's been making some noise, a lot of noise. They got some big things coming to the world, to the blockchain and all that good stuff, and we're gonna just kind of dive into it.
Yeah. So yeah, I mean, we talked about Tesla last week, I'm pretty sure, but
Yep.
So I think last year for the first quarter they produced like 180,000 cars, I think, something about that. And for the first quarter this year, they built 310,000. They produced 310,000 cars, and
Breaking the sales record.
They beat that record, obviously, and and they also beat their goal. I'm not sure if they touched on what exactly their goal was, but my bad. I'm still trying to find this graph for the folks. But yeah, so they killed their goal. Tesla's only grown. We talked about in last week or the week before how they have a plant in Germany that they're building, and they're predicting to make a million cars from there. So Ian sees it 3xing from here. So take the price now, times it by 3. Ian sees it going 3x up from here. Like I said, they beat all their goals year over year in every quarter. And a way to get exposure into Tesla, right? Tesla is right now $1,000, almost $1,100. So yes, it is expensive. And if you don't want to put up that much money, you can actually always buy fractional shares on Robinhood. But you can also get exposure to Tesla through XLY. XLY is an ETF, and 21% of Tesla, of their holdings, is Tesla, and 23% of their holdings is Amazon. Right? Yeah. So it's a great way to get exposure by Tesla, but also getting exposure to a lot of great other companies.
Right. And then also what we talked about last week was that's what we were talking about. Them proposing to, was it them to split their no, I'm tripping.
Tesla, yeah.
Yeah. Okay. Okay.
Tesla.
Yeah. Tesla gonna split. Do a stock split. So obviously we haven't heard any new news on that, but so yeah. So I mean they've been kind of breaking the realm right now with the news. Keep on coming out each week with different things. So Tesla's definitely looking up. Obviously they got Elon Musk on at the helm of it. Doing his thing. One of the gurus of the tech world, and continue to keep on going. So definitely look out for Tesla.
Yeah, and they're also in the NASDAQ, QQQ. Tesla's also in that. I've been holding the NASDAQ now for at least a year, I feel like. And it's a tech sector index, so you get exposure to a lot of the tech companies.
Two index.
Yeah. Yep.
All right.
So yeah.
So yeah, if you guys have any questions, feel free to throw them in the chat. We'll definitely answer them. But moving on to the next
Yeah.
segment.
DJ, thanks for tuning in.
My girl, how you doing? DJ Hurst. But yeah, so the next segment is Apple. Obviously, we've talked about Apple probably from the start of our shows, and it ain't gonna stop. And they are
Oh,
coming big. They are trying to do big things. They're
yeah.
basically trying.
All right.
Me personally, I think they're trying to take over the world.
For real.
but let's tap into it. You guys probably obviously have probably heard because their phones are all right, I guess, but
Oh, please. Yeah, right.
Go ahead.
So yeah, Apple, man, yeah, they're making news yet again. The best company in the world, with they're proposing a subscription model, and which is really interesting. I'm still not totally sure on everything that will be involved in the subscription model, but my guess, I mean, the guys were talking about it's going to have something to do with all their products, right? And Ian and Rashad were actually going back and forth kind of about like the price of what the subscription would be. Ian was saying like 200, 250. Rashad was saying that's way too much. It has to be under $50, which Ian then actually agreed with. So yeah, it's gonna have something to do with basically cutting out some of their competition. So when you subscribe with Apple, you're gonna you'll get everything. You'll get the Apple Music, you'll get the Apple Arcade, you'll get the Apple Health, you'll get my question is too is like, so what does that do with like phones when new phones come out, new computers, new iPads? Like, I mean, I don't know. That's why this is very interesting on what all the subscription model will entail. You feel me? So they have a deal with Goldman Sachs to bring in financial services. So it's going to allow them to have the feature of buy now, pay later, basically, right? Goldman Sachs is going to help them with their financial services, which is also, I'm like, these are just very kind of vague statements. It's like, whoa, everything is like, okay, well, tell me more, right? So it's great. They're in the news with it. It has everyone talking about it, and it's only up.
Yeah, it's very interesting because obviously it's a play for them to. Obviously, Apple's always been at the top of the realm of being innovative on the next new thing, but their plans are obviously to control the game. Obviously, like we said, they're trying to control the world or control their product as much as possible because as of right now, they go through subscribers, right? You go through Verizon, T-Mobile, AT&T to get the phone. At first, when it first came out, it was exclusive to AT&T. Then they spread their wings to Verizon and everybody else. But then now they're trying to get into, and then it was you had to buy the whole phone or buy the whole product at its wholesale value. I'm guessing. I'm not really an Apple guy, so I'm guessing that's what you guys have to do. But then what it's going to also do, it's great for the stocks, obviously, because the investors, institutionals, the retail investors, they all love the subscription model. It helps them, they all love that because it allows the consumers to stay involved or stay attached to that company or to that product long term.
Facts.
And then like what my guy Gucci was talking about, they're gonna be able to bundle everything together. So now you're gonna be attached, even though you might only have the phone, but since you're subscribed, like you said, you get the Apple Health, the Apple whatever, the blah 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 that you might have never even used before, but now that since you have it and it's just already working for you, you all of a sudden you're going to be attached to that work using it, or what is it? So it allows you to bundle everything together, allows them to have a streamline of all their products together. Again, this is all news. We don't know if it's going to be $50 more than that, less than that. What's going to be involved? This is just all talk right now, but they're breaking the news with it, like you said. So that's going to be interesting to see how that plays out, and then what other products do after them.
Yeah, and I'm sure they'll have like multiple subscription options. I'm sure they'll have like their base subscription, they'll have their premium subscription, they'll have their superstar subscription. For all levels. And another last thing I want to touch on, like you said, I'll help the stocks, help their stock. One way it's going to help their stock is when the economy is in a downturn. These monthly subscriptions are going to help. Apple already doesn't have big drawdowns. You know,
Right.
even in hard times, just this last quarter when everything was drawn down, Apple's one of the companies that draw down the least. And introducing the subscription model, they draw down even less because they have these monthly subscriptions that are being purchased through them. So it's only gonna help their business.
Yep.
Yeah.
Yep. So look out for Apple. Obviously, one of the top companies to be invested in,
Especially long term.
Long term for sure. It's obviously one of the monsters in the game. So definitely look into them.
Yeah.
But moving on, man. I don't know if you guys heard, but Facebook versus TikTok.
Yeah.
Facebook is barking, man. Even though they kind of, it's weird to say, man, because they were kind of talking about it, obviously, in the show last night, how Facebook's is already on the throne, or at least has one of the chairs at the table.
Yeah.
And the fact that they're doing all this, they're on Mount Rushmore, and the fact that they're doing all this, we'll get into it. We'll get into it, but it's funny how they're doing all this stuff and they're already on Mount Rushmore, and they're still going for they're still doing target practice out here, man. It's crazy. Yeah. But let's dive into it, man. Give them the details.
Yep. So Facebook is paying for a nationwide campaign to attack TikTok. Basically, they're trying to kill TikTok. They're trying to
spreading rumors or facts. Who knows?
Yeah, they're trying to take them out. They're and why like you were saying, it's wild that they're a top dog in doing this. In Ian's word, he was like, whenever you're superior, if you're superior to somebody or someone, you don't throw dirt on them because it kind of brings you down to their level. You know, he used example of Jay-Z dropping a diss record on like who? Corday, YMB Corday or somebody.
Yeah.
Like, you know, it's like, huh? It doesn't make sense. When you're already so great, you don't have to sling mud on anybody else because you're already at the top. It's the people below you who sling mud on people that are above them, you know, to try and bring them down. So another
example was what they used was like when you're the king on the throne, you don't see the king throwing stones down at the people. You know, people obviously throw stones at the king. So it's just weird to have someone at the throne or someone at the table throwing stones at someone else. So it's very interesting play because the CEO, obviously we've talked about before, is already disliked already to obviously to a lot of people. So the fact that he's continued to just be a rebel out here and do is crazy to me. But he's doing it. He's doing it, I guess.
Yeah, he's a wild boy for sure. So what Ian was saying is it's a sign of decline. He thinks it's a sign of decline for Facebook. We all know Facebook has dropped off majorly over the past years. You know, their stock took like the biggest drop in history that we touched on a few episodes back. But they do still have Instagram strong, and but like I said, this and I agree with Ian. You know, like why for them to do this, they're showing like, oh man, TikTok is a competition that's coming up for us. Like we got to take them out. Like I don't know how else that looks. You know, like it looks like you're scared of somebody who's on your coattail.
Right.
I mean,
to play devil's advocate or God's advocate, like they've changed the narrative of with Rashad. He's still on the fence, man. He's like, man, look, y'all can say what y'all want about Instagram and all this. You know, obviously that's owned by Facebook now, but Instagram is still the top dog, still going to be.
Oh yeah, that's what he's saying. He's saying Instagram is still king.
It's still king. So, and then he's saying the majority of the people still use. Obviously, you know, TikTok ain't no chump either, though. But he said the majority of people are still using Instagram. The majority of people that are entrepreneurs still can use Instagram to build their business. It's still a key. He
Yeah.
says he still uses it. He's still going to continue to use it. So it was definitely a tit for tat. They were kind of going back and forth a little bit on what's coming next and who's going to be the top dog. And then Ian, for example, was talking about how Facebook used to be the thing, and it's all about the young game, what the young people are doing, what they're all about. Because there's going to be something new. And the old people now, obviously, all the old people, or excuse me, elder people, are using Facebook now, and then we're on Instagram. And then the new thing's going to come out. The kids are going to start it. We're going to get to that, and then obviously the elders are going to be using Instagram. So it's a whole cycle that they're talking about. But we'll see, man. It's interesting to see that Facebook is attacking TikTok. Maybe it is for Instagram. I mean Instagram because they are owners of Instagram, and they're just trying to feed the beast and keep their business and all their products or their services up to par. I guess I don't know, but is it necessary? Is it not?
Yeah.
Who knows? Y'all let us know what y'all think.
Yeah. So yeah, Ian is TikTok over Instagram, and Rashad is Instagram over TikTok. So time will tell.
Yep. Moving on, man. As we're getting to our time, China stopped, man. So we've been talking about Russia and Ukraine, but now we're going to kind of switch it over to China. What's going on over there? They're trying to obviously make some plays as well with everything going on in the world, and so now we're going to talk about that.
Yeah. So this is something I didn't know. So for a long time, I guess China was pretty shisty, I guess you could say, about allowing people who are investing over there to look into the company, like into certain companies' finances and stuff, right? So
or they would rig it.
Or they'll rig it. It'll be some fake numbers, some fudge numbers, right? I think Troy said he was a victim of a rug pull investing in China. So, but now they are allowing for the finances to be seen, right? And Ian thinks it's no coincidence that they're doing this now that they're rising as becoming a potential world power, right? A dominant power in the world. So they're saying it's a long overdue thing, but it's just something that's very interesting because China's definitely on the rise. If you guys read that book, The Changing World Order, it talks about the rise and fall of economies and major empires, and China's definitely on the way up, and so like Ian said, there's no coincidence that they're doing this, that they're now doing this now, and while they're becoming, while they're pushing for that number one spot in the throne, so just something to look out for.
Yep. Yeah, that was, and they kind of had a tit for tat on that one as well. Saying is, with the way they operate with the people, with the consumers, just in general public. But then Ian kind of came back at Rashad talking about is America not doing the same thing? Blah blah with our prisons and all that stuff, and all that stuff. But it's definitely a good conversation, good little kind of back and forth that y'all did. I should definitely tap into. But moving on, so I'm going to probably our last segment of the day, the 12 Vanguard investments.
Right.
They kind of went into basically they broke it down for us. I'm saying? I'm telling you, when I said they give us the information that we need, man, to succeed, it's crazy. They really do. So if you guys aren't tapping into to them, we'll obviously give you guys the realest of the real when it does come out, but definitely tap into the money market updates. But anyways, let's get into it. The 12 Vanguard investments that can help your life.
Yeah. So yeah, they said 12, but Ian actually only listed 11. So these are 11 Vanguard investments in any industry, right? And these are funds, index funds. So, but they're also paired with ETFs, so you can get in that way. All right. So the first one is VOO, and it's the S&P 500. It's Vanguard's index of the S&P 500. The next one is VIG, which is a dividend, heavy in dividends. So if you're in the dividends, that's the stock to get into. VGT is their tech sector. VYM is their high yield. VNQ is their real estate. VTI is the total U.S. stock market. VUG is growth. VV is large cap. VO is mid cap. VTWO is small cap. And VCR is consumer discretionary. So that's an 11 point playbook right there. If you don't know nothing about stocks, you don't want to do all the reading, the researching, the following the stock prices every day. These are 11 funds that you can get into that are passive. It'll reallocate it for you. If one company in that index starts to fall off, they'll kick that out and put another one in for you. You don't have to do none of that. So
right.
It's a great passive way to invest. You never lose going with index funds. And also he chooses Vanguard because Vanguard is known for their low fees. They have like low to no fees. So
structure, yep.
Yeah. So they're definitely look into those for sure. Especially if you don't you don't feel like you want to be a market wizard or any of that. It's still good to have your money working for you while you're sleeping. So those are great funds that you can get into. I'm in a couple of them. So look into those. If you don't do anything else, please put your money to work for you.
Put your money to work.
Yep.
So that was about it for our segments. If you guys definitely got any questions, feel free to throw them in the comments section. But before we go, what have you been doing? What's your update, man? Give us an update for the Gucci 3-time update. What you've been on, what you've been looking at, what are you thinking about buying into? Obviously, these are his risks. Do not go off of what he does. Obviously do your research and go off your own risk. But what you got going?
Well, actually, I just joined Red Panda, so
come on, congrats.
Yeah, appreciate that. So right now I'm just soaking up the game that Ian's given on the Stock Club, and I'm also about to download. I got to download some type of software to my computer so I can get on the sniper program and start learning how to trade a little bit. But besides that, just adding to my positions. I invest in at least once a month. I've done twice, maybe 3 times the last couple months, but just adding to my positions right now. No new pickups. I got in Solana when it was pretty good a couple weeks ago, and I'm up.
What's the ticket for Solana?
Solana's a crypto, and it's SOL.
SOL.
Yep. So I got on with them, and that one's actually doing pretty good for me. I wish I would have got more, which is what every investor says when it goes up, and then they wish they didn't get any when it goes down. No new. Not looking to add anybody new to the team right now. Just adding to my position, and investing every month, man. That's what I'm trying to do.
I hear it.
Yeah.
Okay, cool.
So yeah,
we appreciate everybody joining. Looks like we got some late comers joining in.
Yeah, we appreciate you guys tapping in.
Definitely check us out. You'll obviously see the full episode on Gucci's page, IG page. You'll see snippets on my IG page, and then you'll see you can watch a full video on the YouTube channel Square Knowledge. Just type that in, and you'll see all the past and future episodes, man. So the Realest show coming to you. Just tap in, stay tuned. We got a lot coming, and we appreciate you guys tapping in.
Yeah, man, definitely. Thank you guys. It was another good week. Appreciate you guys coming in a little late here. We appreciate the love regardless. We will be back next Tuesday at 6:30 p.m. Pacific. So tap in. We're gonna have more for you guys.
Yes, sir.
All right, man. Appreciate that, Paul. Love you, bro. Yeah, man, definitely. Yeah, tap into those Vanguard stocks, man. The ETFs, yep, all that. Get in where it's good, man.
Yes, sir.
All right, man. Love y'all. We'll see y'all next week.
See y'all next week.
All right, bro.
Yes, sir. I'll see you.